Okay, hi everyone out there in either Facebook land, if you're watching live, or if you're watching on YouTube after the fact. Thank you so much for joining me tonight. I'm Bennett Forrest, Associate Partner on the Miale team at Keller Williams. And as you can see, we have a home buying seminar tonight. And so I've got some esteemed colleagues on the call tonight. And everybody, you'll hear from them. These are our preferred vendors in the different areas of a real estate transaction that are vitally important. And so we're going to talk about a little bit about that tonight. So again, thank you for taking some time to visit with us tonight. I will go ahead and introduce who will be on our panel a little bit later. Jason Kilduff of Ward Kilduff Mortgage. I've been working with Jason basically my whole career. Best lender in the business. Ryan Keating with Keating Insurance Agency in West Hartford. It's been a family business for many, many years. They have a great reputation, and we work closely with them. And then, of course, Richard Witt, LLC, our go-to attorney for all things real estate. He'll be jumping in a little later. So thank you for joining us tonight. All right, so here's a little bit about the agenda, what we're going to cover, just so you get an idea of what we're going to cover. Probably be here for now 45 minutes to an hour. And by the way, if you have any questions, go ahead and pop those in the chat box, and my moderator will be sending those over. We'll get to those a little later, so you're welcome to do that. As you can see, we're already starting with the introduction. We're going to talk a little bit about myself and a little bit about the team. And the path to home ownership. That's just sort of a broad overview of what you need to, what you will expect in the buying process. And then the 6-step buying process is a little bit more honed in on the key things you need to know. There's probably like 30 different steps in the process, but really for the sake of getting started, you just need to know the main 5 or 6. We'll talk about obtaining a mortgage. Again, Jason will be talking a little bit about that later. And Rich Witt, again, your attorney, and protecting your investment with Ryan a little later. We'll wrap up with a little bit of how today's market, and not only how COVID-19 hasn't impacted the market since March, but also just generally what is out there in the market for buyers, because there's a lot of activity out there, and it's really important that buyers know what they're getting into so they can make good decisions. So that's what we'll be covering. You know, the Miale team, as you can see, we're a big team. We've got about a dozen agents. We've got a whole admin staff, a whole marketing staff that does a great job of focusing on their part of the process, which allows the agents out here in the field to really focus on customers. And that's really our focus is the customers. And we wouldn't be able to do that if we didn't have a staff behind us, you know, checking the boxes, crossing the T's and dotting the I. So that's a little bit about our team. In 2019, we were the #1 producing real estate team in Greater Hartford. I believe top 3 or 2 in the state. And then year to date, this year, 2020, we are #1 in Greater Hartford, and I believe either 1 or 2 in the state. So we sell a lot of houses, and you know, we have a great team behind us. So the goal tonight is just to share a quick introduction, a quick overview into, you know, what the buying process is about. And this goes for anybody transacting real estate. You know, hopefully you'll work with us, the Miale team, but whoever your trusted providers or people in real estate, this will help you work with them as well. So our panelists, I've already introduced us. I am going to tell you a little bit about myself. First of all, this haircut is new. This picture is actually only about 4 or 5 months old. And after having the same headshot for about 10 years, I finally got a new one. And then 3 months later, just out of convenience, I shaved the head. So same guy, same glasses, just shorter hair. And so that's me, as you can see, associate partner at the Miale team at Keller Williams. Very proud to be in business with Matt Miale, the CEO and founder of the team all these years. I've been working with Matt. I'm also proud to say I was his first agent hire way back in 2011. So I've been working with Matt over 9 years now, and we've grown from a small team to the team we are today. So it's been great learning from Matt and being in business with Matt and enabling us to do fun things like this. So that's a little bit about me. I don't think you want to read spend time seeing my bio, but I've been around a little bit. So now we're going to just get into your path to home ownership. And really, this is just a broad overview. If you have any questions, of course, any agent on the Miale team can answer these questions. We're happy to take a few minutes to do that. If one of our great agents invited you to this after the meeting, definitely, or after the presentation, definitely call them and sort of follow up because you're probably going to have questions after this. So, so let's get right to it here. Okay, so like I mentioned a minute ago, this is kind of all the steps in the process. And as you can see, there's a bunch of stuff here. So the key word there is process. So, you know, buying real estate is pretty much different than 99% of the retail purchases or any purchases you make in your day-to-day life. So whether it's Amazon or going to the Walmart or grocery store, you know, it's a commodity that there are usually duplicates of. There's no scarcity. So, you know, real estate's different. It's a process. It's a big financial decision. And, you know, especially in determining value. So one quick example I like to use is, you know, say you're at the store buying milk and you're sitting in front of the fridge and there's, you know, dozens and dozens of gallons of milk. And right before you pick one up, you get a phone call. You're on the phone, and while you're on the phone, 20 people come in, they buy a gallon of milk. Are you going to, you know, throw down the phone and run over and grab milk? Of course not, right? There's dozens of milk. There's no scarcity of the exact same thing. Whereas buying a house, no two houses are alike. Even if you have a condo complex where from the outside the units look identical, you know, one may have an end unit, one may have an updated kitchen. So it's a really personal decision. I mean, we basically all agreed that a gallon of milk, $2.99, $3.99, that's what you're going to pay for a gallon of milk. And there's no debate over milk. You know, obviously you have your choice of different things, different percentages and all that stuff. But home buying is a personal decision. One person may value that end unit, whereas another person may value the updated kitchen. So it's really about how, you know, finding the right house for you. So back to the milk analogy for one other thing. So again, after the rush of people come out, you still have plenty of milk. So you hang up the phone, you go, and now you see milk is $13. Now, if you saw that milk was $13, you would instantly know that that's not a good price for milk. You've been buying milk your whole life. You know milk, again, $2.99, $3.99, whatever it is, it's not $13. So you would know instantly based on your experience of buying products all over town, all through your life, that, you know, what they're asking, whether it's, you know, undervalued, a little bit above, or way off base. Where again, real estate is different. Pricing is not an exact science because we don't know what buyers that are in the marketplace the day the home goes on the market, which ones are going to have which preferences. So there may be a bunch of end unit buyers in the market. So the one with a kitchen on one given day may not be as attractive. And on another day, there might be a bunch of updated kitchen buyers. And so that end unit is not going to be as important. So determining value in the home buying process is just that. And part of working with an agent is really about advocacy and shepherding you through the process so that you understand what's the value of a property is. And we're going to talk a little bit about validating that later. But let's start. So yeah, there's everything from hiring your agent, pre-approval, finding your home. You can sort of read all those. These are all the steps that are involved. And, you know, there's some strategies. These are more mortgage strategies as I'm reading these. So this is something that Jason could email you directly later if you have questions about how to make sure you don't mess up your credit or if you need to improve your credit. So these are all the different parts, but let's focus on those core 6 parts. If I can get my computer working. There we go. So step 1 is hiring your agent. So why is that important? Well, hiring a good agent, an experienced agent, will help you navigate the market and make good decisions. Because most people don't buy houses every day, they're not going to understand the nuances of it. And so even though you can find a list of houses on the internet and know exactly what's for sale, again, you're going to have different values and different things to look at and different things to consider. So by hiring your agent, you have an advocate that works exclusively for you. And what's really cool about the buying process is, first of all, it doesn't cost you anything. So we'll get into that a little later, how that works. But hiring a professional agent who has a fiduciary responsibility to your needs does not cost you a dime. So that's the first thing. The other thing is, and this is one of the myths that's out there, there's no secret list of houses, okay? So that's sometimes what people think is, well, I'm going to call agent A because I heard that he has the best houses. Well, the beautiful thing about the way real estate works is that every house that's listed by a real estate agent is made to be available to everyone in the marketplace. And it's done for both practical reasons, right? If you're a seller, you probably want every person that's in the market to at least see your house so that the better chance of the right people coming. And so, you know, that's one important piece of it. Excuse me for a sec. And so that's the thing is, and it's also for the reason of having an exclusive agent. The seller already has an agent. They've got somebody looking for their needs, but your agent is going to look out for your needs. And you can go see any house. There is no limit to house. It doesn't matter who or what company is representing the seller. You, as a buyer, have one agent and you can go see any house. And what that allows us to do is not only advocate through the process, but also be indifferent to which house you buy. We're not influenced by anything other than what you tell us you want, and we're going to help you get it. And it doesn't matter who represents the seller. So hiring your agent is a huge part of it. And it's not just so they can get a list of houses, and it's not just so they can open a door for you. Any agent with a license can go online and request a showing for a given house and get a lockbox code, go meet you at the front steps, and let you in the house and show you the house. And it's funny because that's the easy, fun part of my job. That's my favorite part of being in this business 12 years. Is I absolutely love to work with people and I like to see houses. So I love doing that, and that's the fun part. But really, if you're meeting someone at the house for the first time, you don't know what their experience is. You don't know if they have your best interest, and you have no perspective on the market. So we don't, you know, when you hire your agent, we're going to go over a consultation. We'll get that that's part of the buying process is having a consultation to go over your specific needs. And that leads us into step 2, which is pre-approval. So based on your budget and your income and your credit, we will be able to determine how much of a house you can afford. And that's huge because obviously if you're looking at houses, 250, 300, whatever the value is, you're going to want to have confidence that when you find the house you want, that you're likely to get the financing for that. And we're going to have Jason talk about that a little later. Very important step. Step 3 is finding your home. So just a couple quick steps, like I said, consulting with your agent, getting pre-approval, and then we go out and look at as many homes as you need, right? You know, first of all, the first layer, of course, is excluding houses based on Zillow and all those websites that you're going on. You can also do drive-bys. If you drive by a house on your way home from work and it's got too steep of a driveway, well, there's no point in spending a half hour of our time going and seeing those houses. So, but eventually we're going to focus on going out and seeing houses. And there's no rule about how many houses you can see. The goal is just that every time you go out to look at homes with your agent, you should be more comfortable with what the value and what amenities you get in your budget for that particular town. And that could take a day. Sometimes we have an out-of-town buyers and we give them the crash course, or it could take a couple months or even a year if you have a little bit more of a unique need. So finding your home, that's a personal thing, how long that takes. Eventually you're going to find a house that you love, make an offer and negotiate. And once you have an executed offer, that's really where the work begins. And again, all those other, in the previous slide, there was all those other steps. But really the most important steps are the inspection and the mortgage process, which isn't listed there, but I'll sort of lump inspection and repairs. And I'm going to let Jason and Attorney Witt and Ryan talk about their respective areas later. But just know that you're going to have the opportunity to validate the condition of the home. You're essentially going to spend a couple hours with a licensed engineer, an inspector, and they're going to go over the home top to bottom, looking under the hood, so to speak. And that's your opportunity to spend a little time in the home, identify the parts of the home, especially if you're a first-time home buyer. You want to know where the main shutoff for the water is. You want to know in an emergency, those basics. And then if there's any major defects in the house that either that were hidden or weren't known about, you're going to have an opportunity to negotiate some repairs with the seller so that you're comfortable moving forward based on the condition of the house. And much the same way the mortgage process works. You're going to take, you've been pre-approved, so it should be just a matter of all the documents to get approved for a mortgage. But part of that is also the appraisal of the home. So as I mentioned a few minutes ago, the value of the home is in the eye of the beholder. That being said, it's such a huge financial purchase that both you and the bank want to make sure that you're not overpaying for the home. So you're almost always in the ballpark when you make an offer if you've made an educated decision. But you have the opportunity to validate the price of the home, the value of the home, with an appraisal. And just like the inspection, if the appraised value comes in a little lower than what you agreed to with the seller, then you're going to have the opportunity to negotiate with the seller so that you won't move forward until you're comfortable, you and the bank are comfortable with the value of the home. So those are really the important things. And of course, at the very end, you sort of breathe a sigh of relief. You go to the closing. Attorney Witt will talk about that again in a few minutes. But basically, you're going to sign a bunch of documents, get the keys, and then you're going to be a homeowner. And it's a great feeling. And that's really the best part of the job, in addition to seeing the houses, is when we do the final walkthrough and we take a picture of you in front of your new home. It's just a great feeling for everybody, including myself. And we love doing that. And that's what we live for. So enough about, let's see, just check my time. Yeah, I don't want to be talking too much. So let's talk about mortgage. All right, we have Jason Kilduff of Kilduff Mortgage. And as I mentioned earlier, I've been working with Jason my entire career. And the best thing I can say is that currently I'm closing on Monday. My wife and I are refinancing our home. And there would be no one else. And I know there's a lot of great mortgage guys and gals out there. If you have a trusted person, I would encourage you to use them. But there's no one I would use or would hire to be my loan officer other than Jason. So we're going through a refi right now, and it's been smooth and reminds me of what my customers go through. So I'm going to give Jason a chance to speak. And let me just ask you a question, Jason. I'm going to give you an easy one to start off with. So one of my pet peeves is these commercials. I won't mention the company, but basically the premise of the commercial is that you, the consumer, are too stupid to learn a couple basic things about your home purchase. And so therefore, you just click on a website and you get pre-qualified and boom, you're out looking at houses. So Jason, tell me why that's either a good or a bad idea to that method of getting pre-qualified for a home.
Thanks for the introduction, first of all. And second of all, I think everyone should know what you're referring to, but it's not as easy as push a button, get a mortgage, right? There's so many qualifying factors that go into it. And there's also so many ways that you can improve your situation in order to better your financing agreement later on, right? So if you think about it like this, it's just like auto insurance, right? If you have stellar credit and you're putting a lot of money down, you're going to get the best rate. If you have no car accidents, things like that, you're going to get the best insurance rate, right? So everything's what they call risk-based pricing, right? So I like to talk to potential homeowners as early on in the process as possible, right? Because maybe with a couple small steps, we can position them to be of the best caliber that they are able to be from a lending perspective. We may be able to pay down a little debt, get a credit score to come up a little bit. That would in turn into a better or more favorable rate, right? So it's important when you start thinking about buying a house that you reach out, and whether it be me or, hopefully it is me, but if it's not me, reach out to your lender as soon as possible. Make sure that they're going to review your financial situation, talk to you about your long-term goals. Where do you see yourself in 5 or 10 years? Is this going to be the house that you're going to live in for 30 years, or is this just a starter home and you're going to move in 5? Let's talk about all of that and figure out the best programs and figure out the way to best position you to the banks, right? Whether that means saving a little bit more money for down payment, increasing your credit score a couple points. Typically, there's a lot of things that we can do right in that active window between when you decide to buy a house. We can run your numbers. We can fix a couple things as you're looking at houses, right, and get you all set up even by the time you write a contract, right? And then even after you write a contract, we probably have about 45 days until you close on the house, where we can also tweak a few things. So It's really important to get involved early on. And a lot of people don't want to have their credit looked at, but really, you really need to. It's in your best interest to have your credit pulled early on as possible, review your situation, and let someone who's a professional like myself guide you to set you up in the best manner possible.
Gotcha. Okay. So yeah, that's really helpful. So a couple follow-up questions to that. So sometimes, you're driving by or even on the internet and you see some crazy low rate or what seems to be the best rate. And then you go to get pre-qualified and the rate is higher. So why does that, how come that, I have clients all the time that said, my bank, my big bank that I go to says I can get this interest rate. But you're telling me it's a little higher. Why should shouldn't I go to the other bank and get the lower rate?
Well, I'll give you a real life synopsis of what's happening here. I actually had a client call me today who, when he originally got pre-qualified, he asked the lender what the rate was. And the rates change every day, right? But typically, and I can't speak for the mortgage industry as a whole, but there's a lot of guys out there that when they know you don't have a property, they know you don't have a contract, they know you can't lock into an interest rate that day, they'll quote you an artificially low rate. Oh, the rates are about, let's say today, they're really at 3. They'll say, oh, the rates are about 2.75 today. Because they know if they can just tell you off the gate that their rate is way better than it is anywhere else, that you probably won't shop them during the process, because you cannot actually lock in an interest rate before you have a signed contract, before you officially found a house, because for a lot of different reasons. I had that happen last week. A person called me and said, oh, I'm just going to get a second set of eyes. This guy's telling me this rate. I go, that's a great rate if you can get it. I said, but likelihood is you're not going to be able to get it.
Right.
He's like, well, that's what the guy told me. He called me back today. He goes, hey, I just started setting up my file. I went under contract. He goes, the guy's telling me the rate is about a whole percentage higher than what you told me last week. And what he told me 3 weeks ago was 1.5 points lower than what he's telling me today. Like, there hasn't been that much market movement in the course of time that you're talking about. More than likely, either he didn't look at your file completely, or he didn't understand the logistics and just threw a ballpark number and he misquoted you the rate.
Okay.
He's like, well, you're way better rate-wise than the guy I was dealing with. So the whole thing is, get an official loan estimate. Ask your lender for an official loan estimate. They're going to say the market's fluid. It's going to change every single day, sometimes multiple times a day. Mm-hmm. But it's a bait and switch tactic, and it's not, it's not something that should be going on out there, but unfortunately it is.
Yeah. You mentioned a couple of things, because a couple of things you mentioned are interesting. So, one thing is, how many times have I had a client who, just they thought they were making the best decision based on the rate the person told them. And then, like you said, 3 weeks in, it's a point higher. And at that point, can they just call you up and say, all right, I changed my mind, I want you now? Can they do that at that point?
Well, a lot of times it's too late, right? Because you're going to have contractual deadlines built into the contract. You're going to have a mortgage commitment date where you have to be fully approved. And the banks, we can turn it around as quicker than anybody else out there, but a week or two is not enough time.
Yeah.
And sometimes it's not a situation where you can go back to the seller and say, we're going to switch up gears and go to a different mortgage company, and we need to delay these dates by 2 weeks or a month. So we're going to close a month later. Are you okay with that? Well, I've already bought another house and we're closing on this date. And then, it's almost like a domino effect where those dates can't necessarily be pushed out.
Yeah, exactly. I mean, I've seen it, many, many times where, the client's kicking themselves. And again, it's through, I think it's just sort of in the culture to look at rates. And so the thing about you said loan estimate, that's important because, I've been doing this 12 years and, I always say with everything, compare apples to apples. I can't look at a loan statement. I mean, when people say, well, how do I know which loan's better? I can do insurance and I can look at rates and say, okay, this company and this company, it's the exact same coverage. But the loan estimate is really confusing. So is that the best way to compare apples to apples, is get the loan estimate from you and the competing bank?
Well, that's the required disclosure, right? And without dragging this in too long, I'll tell you this, right, is Rich Witt is going to charge you the same no matter if you close with me or Bank of America, right? And I hate to speak for Rich, but that's the case, right? So what you want to look at is the interest rate, and you want to look at the bank charges, right? Because what you have to escrow for taxes and insurance, what someone's estimating for an attorney fee, I may estimate on the higher side because I don't know who you're going to use for an attorney, right? So we're going to estimate in complete disclosure, worst case scenario, where there's a lot of people out there that are going to disclose best case scenario, right? They're going to show a $200 legal fee, even though there's not an attorney out there that's closing a deal for $200.
Mm-hmm.
So they're going to disclose artificially low to kind of lock you in at the beginning and say, well, you selected the attorney and he's charging more. We try to quote realistic numbers so that when you get to the day before closing or a couple days before closing, you get your numbers, you're surprised in a good way, right? That's all okay.
Yeah.
Let's surprise you in a good way and not have you figure out where the extra $2,000 is going to come from that you didn't account for.
Great. Yeah, thanks, Jay. That's great. So a couple more things, and then I'm going to get to Attorney Witt. So now this seminar is meant to be general information. However, you are an institutional lender. So why should someone choose to work with an institutional lender? Maybe you could explain quickly what that means, versus the online loan from maybe a bank that's maybe out of state or one of the big banks, the big corporate banks. So what are the main differences, and why would you recommend, going with someone that has a brokerage like yourself?
Well, I'm a huge advocate for people to take a look around, see what's out there, right? Mm-hmm. See what's available. I'm always a proponent for shop, because if you can find something better, we want you to get the best rate. And I would never try to sell someone and take a higher rate with me. I want you to get the best deal you possibly can, right? But people don't understand when they walk into Bank of America, they're walking into a full retail shop, right? Wells Fargo, anytime they able to walk in and actually sit at a location and talk to someone, you're talking to a retail location. You're paying full retail. Okay, so we're what they call a licensed correspondent lender, right? We'll broker a lot of our loans, right? But we have the ability to get wholesale pricing, right? So we're going to get the money at the cost that the banks are getting it, and obviously we mark it up. We're not a not-for-profit, but we don't have to mark it up to the extent that full retail locations like Bank of America do, right? We don't have big buildings, right? You're not going to see me on the 30-second slot in the 6 o'clock news as commercials. You're just not going to see the overhead from my organization. We're built our business strictly on referral. We price extremely aggressive to obtain the best pricing for our clients and be able to pass the benefit along to the consumer.
Yeah, that's great. So just curious, so how many loans does your company close in a year?
We'll do anywhere between, 500, 700, depending on the year.
Homes a year that you write loans for, successfully get families. Those are 500 to 700 families that you get to the closing
They'll
table.
include refinances, but yeah, we will we'll do those numbers, but we'll do those numbers based on the fact, you know, if we had the highest rate, we wouldn't be doing that.
Right.
Right. Or we didn't have the service. Who wants to call an 800 number or go on the internet and then have one guy take your application and go, oh, next week you're going to hear from John. He's going to gather your documents. And then after John passes you off to Sally, right, and then by the end, you don't even remember who you're talking to. And it was a complete mess. And maybe things weren't as promised at the closing table as they started off with. So I always tell my clients, you're not going to talk to another person besides me throughout the process. I'm going to walk you through it. We just have to be on the mutual understanding that the banks are going to ask you for documents. We're going to need to obtain pay stubs. They're going to come back to you a couple times and ask for a few different things. I'll tell you what to provide, and I'll be glad to swing by and pick it up or take a look at it and make sure it's the right items before we send them into the lender. But it's one point of contact throughout the process. It's a great rate, and the service level is phenomenal.
Yeah, absolutely. I mean, I can't stress enough how important it is to have that one point of contact. You know, those of people out there that work in corporations, you know that there can be some bureaucracy and not my job type of things. And yeah, you know, even in the local banks, sometimes, you know, the person that's representing you might be doing great, but but their underwriting department may not understand something or may push back. And so having one person who not only is, you know, the first point of contact, but also knows the rules. I mean, I can't tell you how many times an underwriter told you that they couldn't do something and you were like, actually, I read the rules and you actually can. So, and the other way I like to put it is, I mean, we've been through so many wars where we'll do anything to get a client closed. You know, we don't have time to get into some of the stories here, but we've done so much to, you know, to figure out a creative solution to get people to the closing table. You know, that's just what we do. So I actually had another point that I had a brilliant point I was going to make. I know what it was. So yeah, just one other quick thing. And then I have one more question. So, you know, the other thing, you know, the way I like to explain it is Jason and I, or whoever your agent and lender are, we want you to get the house. If it was up to us, we would just give you the loan, but it's not up to us. It's up to a bank and it's up to an underwriter or processor or whoever. They don't know you. They don't have a relationship with you. So if they're just doing their job and checking off a box or something, you know, they're not going to just give you the money. They have their obligations. So our job is to help you navigate and present your file so that the underwriter has as few questions as possible. And then again, if something comes up, we know how to navigate it. So, you know, there's no substitute for that. So one more question. I get this a lot because you're making, you know, these $100,000, you know, several $100,000 purchases, and you know, it can be very intimidating, especially for a first-time home buyer. That's, you know, if say there's a multiple offer and you may have to increase your offer more. And so people hear 10,000 or 20,000 more than they expected, and they start to really, you know, get nervous. So if you could just quickly tell us, when you're negotiating, what is the difference between a $200,000 loan and a $210,000 house? That's $10,000, but what's the real practical kind of, you know, application of that? And secondly, you know, interest rate, if it's 3.5 versus 3 3/4, like, so for every quarter point of it, or however you want to describe it, quarter point of interest rate and every $10,000 in the loan in purchase price, what is the real, you know, effect on the client, on the borrower?
Well, I mean, just for safe numbers without knowing anyone's, you know, personal situation, I would just estimate $6 per thousand, right? But to revert back to the prior comments, this is the thing: is if you're getting counteroffers back and forth, you're not necessarily going to be able to get the answer on the exact payment from Bank of America on 4th of July at 6 o'clock at night, like I was doing this past weekend, right? Yeah. I had a client in renegotiation and really wanted to know what that payment was. Shot me a text and jumped on the phone, right? They have my personal cell phone, and I'm able to give them those numbers and give them some degree of confidence before they just go out randomly assuming what the payment's going to be for that. But I figure about, if I had to guesstimate, figure $6 per thousand, right? It's going to be less than that more than likely, but in your head, if you just said an extra 10,000 is going to cost me $60 a month, that's a safe number to use.
Yeah. So really the bottom line is you are borrowing in most cases, you're borrowing the majority of the 10,000, paying it back over 20 or 30 years. So in effect, the purchase price above goes up 10 grand, but it's $60 more out of your pocket each month. And really at the end of the day, what you're paying per month is really all that matters, right? So do I have that right?
Right. It's usually monthly payment for most, you know?
Okay. All right. Well, I want to get to Attorney Witt, but real quick. So if, what is a quarter point? Say $300,000, $300,000 house, you originally, quoted them a 3% interest rate or 3.5. Now it's 3 3/4. What does that do to your monthly payment?
Well, I'll give you a real life example. And it's a larger loan, it was someone that was borrowing $490, but today I had originally ran numbers for them at a 3.5% interest rate, right? Today I called them and I said, I think you should lock. I was able to get them into 2.875. The payment was $170 less.
That's a good one. Yeah.
Wow.
Yeah.
So, I mean, it really depends on where you are credit wise, right? And what the rates are, right? Because sometimes there's these unique windows of opportunity where you could put down a little bit more or adjust things, or the credit score popped up and the rate's going to be a lot better.
Yeah, exactly. Yeah. And, I'm going to tell one of your secrets, if you don't mind. In your office, I believe you have a separate screen where you monitor the bond market. And so you've got your finger on the pulse of rates, like hourly almost, right?
Yeah, we have the market up all day, and it's data that you cannot really easily get if you're just an individual investor out there. I mean, I'm monitoring specific Fannie Mae securities. That's what's driving the market. It's one of the key things to ask your loan officer when you're shopping. What drives interest rates? A lot of guys out there are still looking at the Treasury for those answers, and that's not the answer. The answer is what specific Fannie Mae bond that they're researching that day. I mean, we have access. We know what the lock desks are looking at and what's driving the market.
Yeah. And you don't need to know bond markets. You just need to know that Jason will help you strategize the best time to lock a rate. And that's what you want your lender to do, is strategize with you. It's a financial decision. It's not just, if you have a good job and good credit, you're going to get qualified for a loan. It's much deeper than just a yes or no. It's all the things we've talked about. So thank you, Jason. That's very helpful. For those of you just joining us, this is Bennett Forrest. I'm an associate partner on the Miale team at Keller Williams. We're one of the top, if not the top selling production team in all of Connecticut. We were #1 in Greater Hartford in 2019, and to year-to-date 2020, the year's halfway over, we are well at #1 production team in Greater Hartford. So we've talked about the mortgage and the pricing. So now let's talk about what the attorney's role in this relationship is, in this process. So I'm going to bring in Attorney Rich Witt, who, again, he can explain, maybe introduce himself a little bit. But I am going to throw you a little bit of a curveball, because I want you to talk about just what the most important things people need to know, legalities when buying a home. But I wanted to just ask you, because we get this a lot about the buyer representation. When someone signs a buyer representation contract with me, which essentially hires me, what is my legal responsibility as a licensed agent when that happens?
If you're a buyer's agent?
Yeah, as a buyer's agent. Yeah, what is that? It's it's just a piece of paper. It's more about loyalty.
Well, it's not just about loyalty. If you're a buyer's agent, that truly means, even though you are being paid by the seller, your loyalty is to that buyer and that buyer alone. And without that buyer's agreement, technically you're working for the seller, both sides, correct, Bennett?
That's your area.
Absolutely. So
yeah.
As a buyer's agent, you're there to advocate for your buyer at all costs and strenuously, and the buyer's agents do that to the 100% degree that I've seen.
Yeah.
I love seeing it when it's solely a buyer's agent and that agreement is signed. So yes, I do favor buyer's agents or buyers.
Yeah.
Yes.
Okay. Yeah, it's interesting. There is sort of a myth out there, like there's not a seller in the world that would let an agent stick a sign in their yard and put their house's information on the MLS without a signed contract. But yet there's this perception, and again, this is part of why we're presenting tonight, is to sort of debunk the kind of myths and perceptions out there that just because you can go on one of these websites and get a list of houses, that doesn't mean that that's all there is to it. So yeah, and so even as a buyer's agent, there's not as much preliminary work, but it's important to have someone advocating on your side.
Yeah.
And give you perspective.
Since that change has occurred, I love it. When that started years back, that you could have your own buyer's agent. I think it was a phenomenal change that occurred. I really do.
Do you mind sharing? I've always wanted to know, what year? Because back in the day, it was listing agent, right? So have you been in the business long enough to remember
21 years. So I think it started about 14 years ago, maybe.
Oh, it's been longer than that, hasn't it?
Has it been? It hasn't been that long.
Oh, okay.
Maybe 16, maybe that's it,
Oh, wow, okay. I thought it was longer than that. So, yeah.
I remember I did the first buyer broker lien in Connecticut. So that would have been about, it was a buyer broker agent who the buyer actually bolted from the agent, got the house on their own, negotiated with the seller, and I brought the first buyer broker lien against the home, against the new owner, which was the former customer. And I got my agent paid in full. And I think that was 2006, I believe.
Okay.
2005.
Yeah. So having, each side of the transaction is entitled to have professional representation. And,
that's correct.
And,
and I advocate for it.
Yeah. And we take that seriously. When you hire us, it's not just, again, it's partly about a piece of paper, but it's also about our fiduciary responsibility.
Absolutely. Absolutely.
Yes. So Rich, can you tell us, again, how does an attorney, what is your role and what kind of things do you do to help the client with the legal aspects of a home purchase?
Well, I think it goes back to what Jason was saying, point of contact. I think one thing that Bennett, none of us on this panel ever advocate enough, because we just think it's normal, is that we make ourselves available 7 days a week. Literally. I mean, I'll tell a funny story. About 8 years ago, I had a question on a mortgage. I called Jason. He was on vacation, and I asked him a question. He answered it purposely. He says, I really don't recall this loan. And I ended up having the wrong Jason loan officer. But Jason Kilduff was so nice. He spent 10 minutes with me on the phone while he was on vacation, answered the phone, and it turned out it wasn't even his transaction, but he had the right answer. So that's how available Jason and Ryan and you, Bennett, I know that because we all talk 7 days a week. And I don't think we advocate that enough, because there are agents, as we know, who even say on their website that they do not work after 5 o'clock on a Friday. There's attorneys who will not give out their cell phones. There's loan officers who you can't get on a good day. And, we just went through that, and it's a compliment to Jason. He was talking about retail banking. I had a client who just moved from Arizona, and we were supposed to close last Tuesday. It's a national bank, and the package never arrived. So they told us to reschedule for Wednesday. We rescheduled for Wednesday. The package never arrived. Now, mind you, this is a gentleman well qualified with his wife, who's a doctor. They both have little kids, and they're living in a hotel. We scheduled it for Thursday. The package never arrived. We finally closed it on Monday at 5 o'clock. So that would have never happened with Jason, ever. But that was a national retail bank. Supposedly there was an important client of theirs, and it took us 4 days to get that closing package.
Yeah.
So
I mean, buying a house is one of the few things where if it doesn't close on time, you might be homeless.
That's
right?
correct.
Yeah. We have a rule on our team. We do not allow homeless clients because, again, if you're expecting an Amazon package, and it's a day late, okay, you're bummed, but you're not homeless or paying for a hotel or have your stuff in a truck. Moving vans are notoriously tough to change, moving trucks. So, sometimes, stuff happens. With enough notice, you can, give your clients a heads up, but the week of the closing, you should not be guessing.
No,
especially if you have some logistical thing. Yeah.
Wouldn't want anybody to go through what this client did, and they'll never do it again. And of course, they stated after the closing that they're just only going to go with a local lender from here on out. But this was somebody that chose out in Arizona, and I had no choice but to live with it. So did the agent. So.
Yep. Yep. So yeah, so in terms of the actual transaction, I've talked a lot about, finding a home and then, all the things that happen after. So what are some of the legal things that are important to know or that they're going to have to go through, once they have a contract?
It all leads to the contract. I mean, I always encourage all my agents to do an attorney review on the contract if they want another set of eyes, oftentimes on a Saturday or Sunday. You're always going to get me, just like you do Ryan or Jason or yourself, Bennett. And I do review contracts. Sometimes I review 4 to 5 contracts on one weekend just to look at it, get that extra set of eyes, add some language if there's something in particular like a failed septic or a well, and try to help the process, because that property might not be there on Monday if you don't get those answers. So it's critical. But literally, we're there from the beginning. We review the contract. We order the title search. We get title insurance that protects you even post-closing. If there's an unknown that arises, we work with your insurance agent. Literally, I like to get involved from the very, very beginning. We order our searches up front. We don't wait for commitment. We order them up front. So if there's an issue on that property, we know within the first 2 weeks. And we're able to tell Jason, hey, I think there's going to be a problem. I tell Bennett there's a problem. We're going to need a little extra time to negotiate those extensions.
Yeah.
But literally, I put everybody on an intro email generally when I work with the Miale team, and everybody has everybody's contact information, and we're there from beginning to end to basically guide you and work side by side with the realtor and the loan officer and the insurance agent.
Great. Okay. So yeah, I mean, really good information. I wanted to just ask you about, you mentioned title, right?
Yes.
So when I go on Amazon, I buy something, I get a receipt, I got it in my email. That's proof that I own it. So tell us a little bit about how do you prove that you own a house?
It's unique because it's unlike a car. You don't need the original title to resell your house. You get a deed when you buy a home, and it literally gets brought to town hall and it gets photographed and then recorded, and it goes into a volume in a book, and those are also online. Mm-hmm. When you go to sell that home, say 5 or 10 years later, the searcher picks up you. They have to go back 40 plus years. They pick up you as the last known owner. The documents are provided to the attorney, and we then draft a brand new deed to sell that property to the new buyer. So it just continues. So literally, once it's photographed and recorded, it could be lost, and it doesn't matter. A new deed is created when you go to sell the property.
Gotcha. So the title or the deed is basically proof that you own the property.
Yeah, and we ask for the highest form deed, unless it's a foreclosure where you're buying from a bank owned, is called a warranty deed, where the covenants are there. The seller has to even post-closing warrant and defend title and make it right if there is a defect down the road.
Yeah.
Again, you also have title insurance to protect you as well.
Yeah. So essentially, when the day you close on a house, you or your family or whoever's on the deed or in your immediate family, you're the only ones that have any right to use the property.
That's absolutely correct.
And that kind of thing.
Exclusive right. That's correct.
Yeah. Well, what happens though? All right, you're in your house, and then all of a sudden you get a notice from the town that says you haven't paid your taxes in like 6 months, the 6 months or a year before you bought the house. Like, what happens if you get a knock on your door or a letter in the mail one day? What happens?
Well,
then?
Mistakes happen. Title searchers make mistakes. Sometimes in condo complexes, they mix up units and they tell you everything's free and clear and there's no back charges. And then you close and the association calls you and says, oh, sorry, we gave you the information on unit 3. Unit 4 actually owes 3 years of condo fees. That's title claim. So if it's an unknown that could not be known at the time of closing, and it was a simple mistake, or the title searcher made a mistake, then it's either on the title company and they'll make right, or they'll pay that claim. And I've seen where they've paid back taxes where it was just missed. Okay. A lot of towns sell their taxes, so it's very tricky. City of Torrington was doing that for a lot of years. So you'd go to the tax site, you'd see clean, current taxes, but they would sell their old taxes, which were not appearing on the tax collector's website. So things would come back to haunt you. So you have to know those things, and the title searchers have to know those peculiarities of the different towns that sell their liens.
Yeah. So you're basically covered. You do a title search, and then you buy title insurance so that if something happens later, you're covered.
Absolutely.
Yep. Well, that's very, very interesting, Rich. I appreciate you coming on today. I'm going
Thanks
to
for
get to
having me.
Ryan because he's been waiting patiently. He's not last only because it's sort of towards the end of the process, not because of any other reason. So thank you, Ryan. I'll get to you in just one second. I will say, and Jason hates when I tell the story, similar to what you just said, Rich, is one time he was opening his pool on a Sunday and he picked up the phone. And, but the caveat to that is when you hire us, you're trusting us to know when things are urgent. So, you know, sometimes a client will wake up in the middle of the night and be petrified about something that happened. And generally speaking, if you haven't heard from us, everything's okay.
Yeah.
But when it comes to, you know, getting an offer quickly, because again, this house is unique. And if this is the house you want to raise your family in or whatever, you know, getting, you know, making sure having someone who's going to respond to that, you know, that's one of the few things that's truly urgent in real estate. So really it's that. So, you know, if you just have a question about your inspection, you may not want to call us at 2 in the morning. Okay, Ryan. So thank you so much for waiting. Ryan, again, is, you know, a family-owned business here in West Hartford. I want to, you know, give you a chance to introduce yourself and to, you know, tell us, of course, you know, how insurance relates. Obviously, you got to have homeowners insurance. So what should people be thinking about in terms of insurance? And should you be getting insurance in 15 minutes or less? Should you be making a decision about your insurance in 15 minutes or less?
So on that one, the easy answer is no. And there's a lot that goes into the insurance product. And similar to kind of some of the things that were talked on today, Jason mentioned risk-based pricing, and that falls very true into the insurance world. He used the car insurance example, but it also comes into play for homeowners insurance, as well as the underwriting process that was talked on earlier too. So those are two very similar parts of the insurance process, which on the risk-based side, things to take into account are credit as well. So similarly, if you have good credit, you're going to have good insurance rates as well. That's just kind of something across the board. A lot of industries have migrated to. Some of the insurance carriers do not use credit-based. Insurance score is probably the better term to use. That's become pretty popular over the last couple of years. So it's a mix of FICA and payment history and claims that tie into what your insurance score is. And then other things like location. So where you're buying your home, if you're buying a home in West Hartford, it's a much easier risk to place than buying a home in Granby with the protection class. So West Hartford is relatively a PC2, PC3, and what really characterizes that is the fire response. So if your home was burning down, how fast can it get put out?
Really?
So Granby and some of the other towns that have volunteer fire departments, you're at higher risk. Or if you have, you know, we have fire hydrants all over the sidewalks. If you notice, they're every 500 feet or so. These towns that you're buying a rural house, you might not have a fire hydrant that a truck can hook up to. So you're relying on either a water truck coming with loaded water and that having enough water to put out what's burning. So those are some of the things that come into the risk-based pricing, as well as age of homes and things like the home value. So another thing too to look at is if you're buying a house at a really good purchase price, that might be, what do you guys call it? You're buying a lot of house, higher square footage on a main road that's $100,000 less than the same type of home on a cul-de-sac. You're getting that deal for a house because you're in more of a high traffic area. But when you're insuring the home, you're still going to have to insure it at the same value by per square footage. So you might be buying a house at $250,000 and insuring it for $400,000.
Gotcha. Okay. Wow. So that is so cool. You learn something new every day. Those are two things I had no idea. So the town you live in affects your insurance rate. So I happen to also live in West Hartford, like you, and of course, people always complain about taxes, but I always say, well, you get a lot for your taxes. You get you get your good schools and all that. But I had no idea that I think there's like what, 6 firehouses in West Hartford that actually helped homeowners insurance. I had no idea. I also had no idea that credit. I had no idea that credit did anything. I thought it was just about the square footage of the house and the age of the boiler and stuff. So that's really cool. I had no idea.
Yeah, boiler's important, and then also roof. I mean, so that's part of the underwriting side of things. Having a modernly replaced roof when you're looking at a home, that is going to benefit your insurance as well, and that's a big factor you should think about too. Are you going to have to put in the 10 grand to replace your roof, or is that going to be part of the purchase price so you can think about, okay, I don't have to worry about that for 20, 30 years.
Yeah.
And then something we see a lot of too that catches people is on the electrical knob and tube wiring. So there are a lot of older homes in the greater Hartford, Connecticut markets that have knob and tube that might be disconnected, but when an inspection happens, they can, there's pictures showing residue or old wires, and insurance companies flag those on part of the underwriting side. So they might decline coverage, making it harder to find a carrier to do that. Or you add another step in the process of needing to get an electrician to sign off saying the work's going to be done within 30 days or 45 days post-closing. So if you buy your insurance in 15 minutes or less, those could be all headaches that you're going to have to deal with after the fact.
Yeah, exactly. Yeah.
Part of working with
so
us is,
like you said, it's all about, insurance is all about, they want to, they don't want to pay out claims all the time. So they want to, mitigate their risk by either declining or pricing based on the risk. So you've just shared a bunch of different things they look at, a few that I had never heard of before. Anything else that people should be looking at, in terms of I'm buying a house? All right, they said I got to get insurance. All right, what do I do? What am I looking for? What are some of just the key things to look for?
Pretty much part of it is you're making a long-term commitment in ways with your insurance agent. So similar to the same process of finding the right real estate agent, you're finding an insurance agency that is going to be a partner and your advocate for your insurance needs every year. You're not buying a house every year, maybe, but you're going to have insurance for your livelihood of homeownership, and you want to make sure that people are looking out in your best interest. On the other side of it too, if it's your first home, usually you're going to have to pay that premium up front. So you might be looking at $1,000, $1,500, even $2,000 expense that you might not be ready to cut the check. And Richard, I don't know, do you guys build in the insurance premium into closing costs sometimes?
Yeah.
So knowing with how that premium is going to be paid, if it's built into closing costs paid by the attorney, having us know that, we can issue the binder and proof of insurance and then collect that check after. And that's something that the lenders are usually pushing for, all that information as soon as possible to get you that best rate, because the variables change. The insurance rate factors into your lending rate. So all of those things tie into getting you that best rate so you can close on the house as soon as possible and get the house before someone else might take it from you.
Exactly. Yeah. And we haven't really talked about closing costs on this seminar. We may have time when we get to the Q&A in just a minute. We're hitting close to an hour, so I'm going to start wrapping this up. But Ryan, I do have a couple more things for you. One is, you mentioned relationships. I'm going to hold that. I'm going to get to that in a minute. I want to finish on that. But before I get to that, if someone's buying a house and they've gone through the pre-qual and they know their budget, how can they guesstimate or even estimate what their insurance is going to be? Is there any kind of general rule of thumb to say, how is it going to be 1,000? Is it going to be 3,000? Like, is there any way to get a good guesstimate?
Somewhat. So one of the nice parts about technology that the insurance industry is finally starting to catch up on, we actually just brought on Nationwide recently, since they just switched from a captive model to an independent model, which is one thing I just kind of touched on too quickly. We're an independent agency, so we represent a variety of insurance carriers. And we have some tools on our end to market to 8 to 12 different companies at one time to see how they all price and where their underwriting comes in. So Nationwide actually has got some nice technology that we're onboarding that we can provide realtors and home buyers and shoppers a link that they could type in the address and pretty much mine, 5 questions and have a rough price estimate. So we're excited to be having that.
Okay, great. So you're working on that. What's the timetable on that? Just
hopefully by the end of the month next week.
Oh wow!
So they went live 7/1. So
okay, and does that lock you in if you use that tool? Do you have to use Nationwide?
No. It's kind of so property cards have a lot of information. There's a lot of public information out there on homes. This is basically a data aggregator that helps do that, and otherwise too, knowing the protection classes of where you're looking. There used to be, back in the day, you had a rating manual, a book of different factors. So technology's made it different, and it changes with each carrier. So it's hard to say.
Yeah.
You can guess, but
yeah. Well, that's great. Well, yeah, if you're, one of our clients or if you're buying, certainly reach out to Ryan and his company. And, obviously that tool will be available shortly. But, I'm sure he'll be happy to answer any questions and give you sort of a ballpark based on the town and all those factors we mentioned. So I'd like to end, because we're at an hour, I'd like to end with Ryan and then get to the FAQs or any questions. But tell me just a little bit about you're sort of like Jason's independent brokerage. You are as well. So do you do other things besides homeowners insurance, or, tell me about how someone can, work with you over the years?
Yes, thanks for that. So we're a property casualty independent agency, which we do auto insurance. And one of the things too is packaging your home and auto together with the same carrier. We'll generally provide around a 20% discount on your insurance costs. And one thing we notice a lot too, if you're new couples that recently married buying their first house, sometimes people still have separate auto policies, and that's definitely one thing you want to get put together. So when you're buying your first house, and this provides a great opportunity to do that. So we kind of take on that overall advisory role. Yep. On how to personally manage your insurance package and what it does.
Yeah. Yep.
And then along commercial insurance, working with business owners and workers' comp, liability, commercial autos.
How long has your company been in business?
51 years now. So over 50.
Are you second generation or third?
I'm third. My dad's second, and then so it's my sister and I. And my
dog,
dad's still active. And my dog, agent's hanging out over there somewhere.
Awesome. Well, thanks, Ryan. That's awesome. Yeah, family-owned business, great people. And just like, Attorney Kilduff, Jason Kilduff, it's an advisory role. It's a big deal. You can, again, buy something on Amazon and maybe you buy a defective product. It's not the end of the world. But with a house, you really want to cover all your bases. And, the goal is for us to just make it simple. You don't necessarily, one of the big, as we wrap up, one of the big things about about a home purchase is that, it's just different from other things you buy. So, it's one of the few things you want to take a little bit more time, and you don't need to know how the sausage is made. We'll give you enough information so you can make intelligent, informed decisions, but we're not going to bog you down with a bunch of industry terms and stuff. That's what we do. And so, just a quick heads up on that for people that knowledge is power, but don't think you have to be an expert to get started. So real quick about the market. I know we're running a little low on time here. So with COVID, obviously it's been 3 or 4 months and there's a lot out there. Basically, our team, as soon as COVID hit, we sort of huddled down and we conferred with, of course, everyone on this call and said, are we able to, we were deemed essential real estate. Are we able to do our job effectively and help our customers effectively and safely? And the long story short is yes. We've, of course, taken, as much in-person visits out of the equation as possible. We were already doing most of our work online. So what I always say is the only thing you have to do in person is, go look at houses and attend a closing. And, I know Rich in the past has talked about what they're doing to, the standards for closing and all the protections they're doing. Whatever the recommended is, Attorney Witt is in his company is going above and beyond. So if you have any specific questions about the actual closing, of course you can contact Attorney Witt. We're doing virtual appointments, we're doing virtual tours, we're being more strategic about seeing houses. Maybe we're not kicking as many tires. All these kind of things that you see here, we're taking precautions, and whatever you're comfortable with. If you've been working with us and you just decide you want to take a break and maybe take a year off because you're just not ready, we're here. We're all here for the duration. We're not going anywhere. So we're here to meet you. But that being said, since the restrictions opened up, the market has really gone crazy with buyers. So if you are looking to buy, it's more important than ever that, again, you have an experienced realtor. Just to, pat myself on the back a little bit. I mean, in the last month, I've had 3 different clients win a multiple bid offer. Because I know all the little tips and tricks, frankly, and working with Jason to crunch the numbers, to put our clients in the best position to win in a multiple offer situation. So we're seeing a lot of those, but with good counsel, you can win those bids and get the house you want. So won't go too much into the stats, but there are a lot more buyers than sellers. So if you know anyone that's looking to sell, houses will sell quickly. If you want to buy, obviously, which is the focus of our call today, talk to one of us on the call, or any agent on the Miale team. We'll be happy to help you navigate this market. And if now's the right time to buy, we'll help you find the right one. And we've had many success stories doing that. So frequently asked questions. I am going to go over these a little bit quickly. Thanks for staying on, everybody. And we'll have a recording of this later. What if I don't have good credit? So Jason, you touched on that. Can you give us 30 seconds on, on credit?
Sure. So I'll give you the long story short, right, is you don't need great credit. You don't even need good credit, right? Prior to COVID, we had lenders going down to a 580. FHA technically does not have a minimum FICO score, although if you're below a 580, there may be things on your credit report that need to be fixed, right? But like I said before, reach out as soon as possible. There's things that we can do to help you and guide you and give you some advice, solid advice on how to prepare for homeownership. I'm really pretty good at analyzing the credit. I can say, you know what, I think you're 12 to 14 months out. If you can do the following, I can run your credit in a hypothetical environment and change things around and see what the score might do, right? Yeah. So I'm always willing to help out people, but really it's, if you want to get serious about it, get your credit pulled early so we can try to help.
Yeah, that's a great point. A lot of people come when they're ready to buy and then they're disappointed. And the good news is what we always say is do what Jason tells you. And in 3 months or 6 months, you'll be ready to go. But if you want to avoid that, obviously start now. If you're thinking maybe in the fall or early next year, start now, give Jason a call and we can make good credit, bad credit good and good credit better. I already covered what it costs to hire me way at the beginning. The beautiful thing about this, as a buyer is, I get paid by the seller, but I work for you. So it won't cost you a dime. All your cash can be focused on the down payment and all the things for purchasing a home. Is now a good time to buy? The answer is, if your life circumstance is that you're ready to buy, you should buy. Good market, bad market, seller's market, buyer's market. It's always a good time to buy if you're ready for it. The prices are going up due to the competition, but interest rates are low, so it sort of cancels out. So we'll help you figure out what your affordability is, and we'll find you a house based on that. How much house can I afford? Again, the lender can do income to debt ratio and tell you that. Jason touched on financing as well. All types of loan programs. There's government-sponsored loan programs that allow you to do little or no money down. And then there's more conventional products that let you to do 20% 5%. Jason, did you want to comment on that, or?
So there's a lot of different down payment options available, right? You can do a conventional loan. Everybody seems to think that you need 20% down. You can do a conventional loan with as little as 3% down, right? It's still a conventional loan. There's programs out there for 100% financing, VA, USDA, CHAFA. There's a bunch of different options out there, but the best thing is to have options, right? So I would love to be able to tell you what your options are, help you decide which one's the best one for you.
Yeah.
You take it from there.
Absolutely. Yeah. I mean, you know, it's a little bit of alphabet soup with all the different things, but we'll explain it so you understand what your options are. How much you already answered the next question. How long does the whole process take? This is a great question. So the way I like to frame it is the day you put and have an accepted offer on your house to the day you close is about 30 to 60 days. And it usually falls somewhere in the middle. So add to that how long it takes you to find the right house or to fix your credit or whatever. So, you know, 45 days from, like we like to say, contract to close. But everyone's different. Some people, again, out of town buyer comes in, crash course in the area, and we find them something great in one day. Other people, you know, want to take a little bit more deliberate approach. So, you know, we're here to help you. You know, when you hire us, we're not tied to when you buy or how much house you buy or whatever. We just, if it's the right house for you, we help you get it. That's all we can ask for. And how do I get started? Yeah, call your agent or lender. Obviously the Miale team, we have, you know, about a dozen agents, all well qualified to help you through the process. If you're on the call or you're watching this and you know, one of our team agents introduced you, call them. They'll be happy to help. You can start certainly with Jason if you'd like, and you know, all the contact information is there. So yeah, I just want to wrap up. You know, thank you to everybody who joined us tonight and who's watching it out there. I don't think we have any questions, so I'm going to cut it off there. Again, want to thank, there we go, perfect. Thank you for joining us. Here's my contact information. Take a screen grab, call it, or Google us. We're all right there. And we want to help you get a house whenever the right time is. And, you know, we'll be with you for years to come, hopefully. So give us a chance to show you what we can do. And go on Facebook, make a comment if you have any feedback about the call today or any of the information, or just want more information. Let us know. And I apologize. There was a question from Rob who asked what type of interest rates, finance programs are there for vacation homes. So is that an easy answer, or should they just call you, Jason? Is that a quick answer for vacation homes? You're muted.
Yeah, and Ben, I just want to point out Ryan's numbers and my numbers are mixed up. So just if somebody wants to reach me, it's the number under Ryan, and if you want to reach Ryan, it's the number underneath me. Gotcha.
Okay. Well, oh, you're right. Yeah. Well,
unless it's 2 a.m., call the 777-5324.
Exactly. Yeah, that's funny. So yeah, thanks for picking up on that typo. So go ahead, Jason. Is the vacation thing?
Lots of different options out there for second homes.
Okay.
Yeah. So my contact information's there. Feel free to give me a call, Rob. And
exactly. Yep. No obligation. We just want to help answer some questions, and there you go. So thank you to everyone for joining us. Jason Kilduff, Richard Witt, Ryan Keating. I'm Bennett of the Miale team. And thanks for joining us tonight. I'm going to stop there, and let us know if you have any questions.
Thank you, Bennett.
Yep. Bye, guys. Thanks for hopping on tonight.
Thanks, guys.
Thank you.